Everything you were taught about globalism is dead.
For 30 years, the world operated on a simple rule: trade brings peace, and peace brings profit. But look around, it's 2026, and that rule has been set on fire.
Today, we aren't just trading goods, we are trading blows.
From the semiconductor blockade to the new interventionist era where governments are the biggest players in the market, the map of the world is being redrawn, and your portfolio is right in the crosshairs.
Today, we are going deep. We are looking at the three major geopolitical fault lines of 2026. Why the Middle East conflict is testing the limits of global growth, and most importantly, the specific trading strategies to protect your wealth in an age of fragmentation.
2. The EU-China collision. Let's start with the big one. The collision in early 2026. The laissez-faire era officially ended in Europe.
After years of watching Chinese industrial overcapacity flood the market with EVs and solar tech, the EU has finally hit back. The problem: explain how Europe's fragmented politics collided with China's surging manufacturing.
The investment impact.
Why German automotive stocks are struggling and why critical minerals have become a top security risk. The trade.
Moving away from broad emerging markets ETFs and focusing on friend-shoring hubs like India and Vietnam.
Part 3. The Middle East and the energy pivot. While the trade war brews in the East, the Middle East remains the world's most volatile energy tap. The 2026 IMF report warns that a prolonged conflict there is the #1 threat to global growth. Geopolitical analysis. Discuss the limited duration vs broad conflict scenarios. Inflation. Why headline inflation is ticking back up to 3.1% because of shipping disruptions. The finance angle. Defense spending is no longer a niche sector. Governments are scaling up military budgets, which ironically boosts GDP in the short term, but crushes social spending. Part 4. The rise of government-led finance. This is the part most investors miss. Governments are no longer just referees, they are the MVP players. In 2026, we see the US and Europe adopting China's playbook: heavy subsidies, state-led investment in AI, and protectionism. The AI bubble vs reality. Are we seeing a reassessment of AI productivity? The fiscal trap. With high public debt, how much longer can governments fund these trade wars? Sector winners. Cybersecurity, aerospace, and domestic semiconductors. Part 5. Strategy: how to trade. So, how do you actually play this? You can't just buy and hold a world that is breaking apart. 1. The resilience portfolio. Focus on companies with localized supply chains. 2. The gold or digital hedge. Why traditional safe havens are back as the dollar or yuan rivalry intensifies. 3. Active management. In 2026, the macro environment moves faster than the math. You need to be agile. The world isn't ending, but the old world is. Those who understand the new map will thrive. Those who ignore it will be left behind. Hit subscribe to stay ahead of the curve. I'll see you in the next one.